I basically have to start recording this video again. Anyways, alright, so welcome to this market structure video. Oh god. So market structure is like one of the most important topics in trading. If you want to be a profitable trader, you have to pay attention to market structure. So if you're a newbie coming into the space, please listen well. If you are an intermediate trader that is not profitable, not knowing market structure might be one of those things keeping you unprofitable. Yeah. So just please listen attentively. So what is market structure? Market structure is simply the way the market moves, the direction the market is moving. Now we have two ways the market moves. We have a trending market. And then we have a ranging market. Now, in a trending market, the market trends, we have an uptrend and we have a downtrend. In a trending market, the market trends either to the upside or to the downside. When the market is trending to the upside, we are looking for buys. When the market is trending to the upside, we are looking for buys. And when the market is trending to the downside, we are looking for sales. And in a ranging market, we stay out of it because this is where most traders lose their money. So once the market is ranging, we stay out of the market. But once we have this trending market, the uptrend and the downtrend, we can buy or sell. We can either buy or sell. Yeah, this is what it looks like. So this is what an uptrend looks like. When the price is going higher and higher, this is what an uptrend is look like. This is what a consolidation looks like. You can see that here, the price went up. Instead of it to come down and not take out this low, it came down, it took out the low, and then it still went back up again. It's showing us that this market is just consolidating, because in an uptrend we have this low, we have this high, then we have this low that is higher than this guy, and then we have this high that should be higher than this next high, and then this low should not go below this low. This low should not go, it shouldn't go below this guy. Do you understand? The lows should not go below each other, but the highs should go above each other. So we have rules to identify if we're in an uptrend or a downtrend. Now, in the downtrend too, you can see this is a low, this is a high. You can see that this high did not take out this guy, but instead this low took out this low. Remember, in an uptrend, our lows, they don't take out each other. It's only the highs that take out each other. Now, in a downtrend, the lows, they take out each other, while the highs, they don't take out each other. Do you understand? Let me show you. I've done all this before. I did not know I don't just know how the recording got deleted anyway, so I'm just starting again. Now, this is an uptrend. One of the ways we know if we are trending upwards is that price will be printing higher highs and higher lows. Yeah, price will print higher highs and higher lows. You see this high, this is higher high, this is a high that is higher than this one. This low is higher than this one. This low is higher than this one. So in an uptrend, to identify that you're trending upwards, you must abide by this rule. First of all, check, is your high taking out the other? Are we getting higher highs and higher lows? If we are getting higher highs and higher lows, then you check the Forex box. Then the second one is there a valid break of structure? What makes a break of structure valid is that we close with a body candle. Body candle above the previous high is what validates a valid break of structure. In this scenario now, we got a body close above this guy, validating it as a break of structure. Here too, we got a body close above, validating it as a valid break of structure. So what we expect this guy to do is to just come and take out this guy, giving us another higher high, and then breaking above with body, giving us a break of structure. So let me show you what this looks like on the chart. Like I said, it's crazy. I have literally done this. So now this is a high and this is a low. It went up to print this high, and then printed this low, and then went up to print this high again and printed this low, and then went up to print this high again and printed this low until he went here, printed high. He came, he didn't take out the low, he didn't close with the body. So he went up and print another high. Now we now know that yes, we are having higher highs. So the next thing we have to check for is it breaking above this other high with a body close? As you can see here, you can see that this candle closed above. Let me zoom in. Consider this candle closed above with a body close. Now, this is a valid break of structure. Yeah, this is a valid break of structure. Let's go to the next one. After I brought the low, as long as price did not take out this low, as long as price did not take out this low, and it came back, and then it went to take out the high, we are still in an uptrend. And then the next thing you will check is this is this a valid body close? You can see that this first candle only used the wick. It only used the wick and then closed inside. But this candle later came out and closed above, giving us a good body close. And this is a valid break of structure. The same thing with this guy. After he gave us a high, he came and gave us a higher low, and then he broke above again with a valid body close, giving us a valid break of structure. Same with this, we got a valid break of structure. Same with this guy too, we got a body close above, which is a valid break of structure. So this is the way we identify our uptrend. Now, how do we identify our downtrend? All right, so for the downtrend, we will be having our lows. You can see here, this is a high, this is a low. Yeah. Now you can see that this high is lower than this high, and then this low is lower than this low. This high is lower than this previous high, and then this low is lower than this guy. Remember that in our uptrend, it was the highs are higher, the highs are higher than the previous ones, while the lows are also higher. The lows are not taking each other out. It's only the highs that are taking each other out. But in a downtrend, the lows are taking each other out, while the highs are not taking each other out. Do you get? So here we characterize to know your value. If the downtrend is valid, you must first search, are we having lower lows and lower highs? If you check, like here now, we have a high, then this high is lower than this guy, and this low is lower than this guy. So yes, we have a valid downtrend right here. Now the next thing is, do we have a valid break of structure? That's when the body closes above here, giving us a valid break of structure. Do we have a valid break of structure? Which is yes, we have a body close below these guys. So this is a valid break of structure. So once these two are present, once they are present, just confirm that yes, we are in a downtrend. Now let's check what that looks like in the chart. All right, so looking at this guy, you can see that we got this high. Price started from this low to this high, yeah. So we got this guy. This high took out this high, yeah, and gave us a break of structure. This is clearly an uptrend. Yeah, the same thing happened here. The high took out the previous high, giving us a clear break of structure. But then when we got here, we noticed that price started printing, instead of this guy to go ahead and take out this high. If you take out this high and give us another high that is higher, but instead he printed a lower high, and then it came downwards here, and then pulled back again and give us lower prices, signifying that yes, we are in a downtrend. Yeah. Now the next thing does he use is he a body close? You can see that here, first of all, it was a wick. It was a wick. I've already told you guys what wicks and body is. If you don't know, watch the video on candlestick. Yeah. If you're following this video back to back, I've covered that. Now, this was a wick. Here also was a wick. So it was not a valid break. But immediately this body closed below, it gave us a valid break of structure, signifying to us that yes, we are in a downtrend. Here again, we caught this pullback and then we caught this break here with a body close. So yes, it is a valid break of structure. Here again, we pull back and we went below. We got with a body close. Yes, this is a valid break of structure. But getting here, you can see this is a week. There is no body close. This is a week. Now, this can signify that, oh, we are either about to start buying or the price should come down and give us a body close to confirm this as our downtrend. Let me see what we get. So yes, that's how you identify if we are in an uptrend or a downtrend. It's easy, just follow the rules to know which and which we are. And if it's a ranging market, let's say it gives you a high and then it comes back to take the low and then it goes up to, just stay out of it. Just know that yes, that's a ranging market. We are not going anywhere. So just stay out of it. Now, something else you should take note of is, as this low is here, it's supposed to come up and give us a high. Yeah. What if this low now does something like this? It just pulls up small and then it comes and takes out this low. It comes here and takes out this low. Now, this is signifying to us that we are no longer in an uptrend, because in an uptrend, only the highs should be taken out. The lows are protected. Why do we say they are protected? Because the lows should not be taken in a downtrend, in an uptrend. The lows should not be taken. Remember, we say higher highs and higher lows. So the lows should not be taken in an uptrend. Once the protected lows that should not be touched, they are protected, they should not be touched, they should not be taken. Once they are taken, it signifies to us that we have entered a downtrend, because in a downtrend, the lows are taken, but the highs are protected. We don't take the highs in a downtrend. We protect the highs, but the lows are taken. So just know the words and opposites. In an uptrend, the lows are protected. In a downtrend, the highs are protected. What do I mean by protected? We don't take the highs. We don't break above the highs. The highs are always below each other. Do you get? They don't go above. And in an uptrend, the lows are above each other. They don't go below each other. But now you can see in this case, this price has changed. It has come down to take out this low. And we might probably get something like this. It will now go and now print another new low. Now, this first thing that this price did here, we call it MMS. That is market structure shift. So this is MMS, or some people call it change of character. That means the character was bullish, now it is bearish. Remember, when we are in an uptrend, we are bullish. Anything with buys is bullish, yeah? When we are in an uptrend, we are bullish and we are only looking for buys. When we are in a downtrend, we are bearish and we're only looking for sell. Now, all of a sudden, instead of us to be looking for buys, after this low is taken, we will now start looking for sells. We will now start looking for sells. Another mistake that people make is that as you see this low now, you will say, oh, this is another break above. This is not a break above. Remember, this was our high and this was our low. So it's only when anything touches this high and this low that we will identify it as a break or a shift. Now, this is a shift. So price going above this is not another break. Do you understand me? It is not another break. Now, as price has gone above and then came down and still created a lower high. Now, this is our break of structure to the downside in this case. This is our break of structure to the downside, yeah? So this is our break of structure to the downside, signifying that we are no more trending upwards, that we are now ready to come down. I think I'm seeing something like that here. Let's see. I think it will be more easier in the 15 minutes. But as you can see from here, you see that this price changed. Like we've been buying up. This is low, high. Oh, sorry. This is low, high, low, high, low, high, low, high. Then all of a sudden, this price now came down and took this guy out, taking our lows out. Remember that our lows are protected. Taking our lows out. Let me take this to the 15 minutes. I think it's more clearer there. All right, so you can see we've gotten more structures. Yeah. So you can see from here, price was actually printed. This was a low. This was a high, low, low, a high. Then price came here. We're supposed to get a new high. But what the price did, it gave us a lower high and then printed a lower low. And then went on give us another lower high and then printed a lower low. Yeah. So this first sign that price gave us of printing lower high is what we call market structure shift or CHOCH, MSS. Or when you see people write CHCO, CHOCH like this, that they mean the same thing. Market structure shift or change of character. Anyone you use is perfectly fine. Do you get? So now you know that yes, this market is changing to the downside. All you need to do is follow what the market is doing and confirm. Always confirm. We have our valid break. This is a body. We have our break of structure too, which close with a body. You can see the first one close with weak. We will not pay attention until we got this body close. Yeah. Now, it will get to an extent. The structure will also flip back bullish. Yeah. It will flip back bullish. I don't know what's wrong with my network. My replay is not really playing. I don't know what's wrong with the network, but I wish you could replay. You would see how this changes back. But let me do something. Now you can see here, we have this high and we have this low. And you see all this, we don't care about what's happening here. As long as it doesn't touch our high or our low, we don't really care, yeah? But once it touches our high, like here now, you can see we got this massive break to the upside with body, signifying to us that, hey, we are about to shift because you can see this was a break of structure to the downside, meaning that the price was coming from the downside, which is what we were looking at previously. You can see the price was coming from the downside, but right now we can see that this market has shifted. So all we should be looking for now is the buy. Now this is our valid MSS. This is the valid MSS because it's already closed. So all we want now is for the price to pull back and then take us along. That is all we need right now. And as you can see, that is what we got. We got the pullback. Remember, that's why I said mark out the high and the low. Some people now, once this low gets taken, yeah, you see this low now, once this low get taken, they say, oh, the market has a broken structure or changed character to the downside. It's a lie, oh. This is your low and this is your high. So anything that is not affecting it is none of your business. Imagine somebody say that, oh, the market has changed character to the downside, and then they want to probably sell from here. You see the way the market will take them out with speed, hitting their stop loss. So don't do that. Make sure that you know the high and the low, and then you see as market pulled back and then went ahead to give us a higher high with body close, and then you keep following it like that. You see the market will keep printing until it's ready to change character again, and it will give you the change of character. Now, what is the best way of trading this change of character so that you don't get caught? Like here now that you are confused, is this the change of character? Should we use here? Should we not use here? The best thing to do is wait for this change of character to happen and wait for a break of structure in that direction. Do you get me? Wait to be safe, yeah? You will miss trade, yes. We don't want to catch every trade. We just want to catch few trades that we will maximize our profit in this market. So the best way to trade is after this, wait for this break of structure to be safe. Unless this MSS happened after maybe a POY or a zone. Don't worry, I'll teach you POY when we get there, but just listen to me. Maybe it happens at a key level that you are expecting reversal from. It tapped into there and then it gave you this MSS. You can go ahead and join the buy. Do you understand me? You can go ahead immediately and join the buy. But if it is not an area you're expecting it, just wait for a valid break of structure. Now, once this structure is broken, at any other pullback, you can join the buy and ride it to wherever your target is. Do you get? But just notice that once the market is exhausted again, see here again, it gave MSS and then started printing lower highs. That is just how the market works. Make sure your valid break of structure is with a body close. And then if your MSS did not happen from a zone you are expecting a reversal, make sure you don't buy immediately or sell immediately. Wait for a valid break of structure. And now I forgot to add this. BOS, we use it for trend continuation. Do you understand? When we see BOS break of structure, it means that the trend wants to continue in that direction. Let's say it's breaking structure to the upside, which is a bullish move. That means we want to be buying to the upside. But you see, once MSS or change of character happens, it means that it's for reversal. Look at this place now. You can see we were selling. We sold from here. On a norms, we should also be looking for to sell from here. That's why sellers were active here. That's why you can see this weak rejection that pushed price lower. Sellers were active there. So we are supposed to be selling from here. Yeah. But all of a sudden, market has reversed. It says, I'm no longer selling. I want to be buying. It has reversed to the upside. That is why it gave MMS. So when you see sorry, why am I saying MMS? You're not gonna say MMM here. Okay, so MSS. When you see MSS are for reversals. They are for reversals. Why break of structure is for continuation? Where did I write that stuff? Okay. So let me write it out. So whenever you see a break of structure, just know that the trend wants to continue in that direction. If it was formerly in the downside, you know that the trend, like here now, you can see once we get this MSS here, what is this signifying to us? That the market wants to reverse. We've been buying. This was a break of structure, which signifies that the trend is going in the same direction. Yeah, this is the trend continuing in the same direction. This is the trend continuing in the same direction. But immediately we got, this was also the trend continuing in the same direction. But immediately we got MSS. This now be our MSS here. Immediately we got MSS with a body close. It's signifying to us that we are about to start trending downwards. Now, it's not now that you can, don't worry. I think in the advance, I'll teach you how when it does this MSS, you should know how we are expecting internal pullbacks or complete reversal of trend. Do you get? We'll talk about that. I think that's why I said I can't join these videos together. It will be too long. So I'm going to make 2 videos here. This is just to onboard you on the basics. Now, this MSS is telling us that this market wants to reverse. It wants to reverse or it wants to pull back. Yeah. All right. So another thing before we complete this beginners, another thing I want to show you. All right. So another thing that I want you to know before I'm done with this basic level is that I want you to know how the price moves when we are trending. Yeah. So this right here is an impulse move. Let me label it with something, a different color. So this, which is like the main move, is an impulse move. Then the pullback that we are expecting, this pullback, this is corrective move. Yeah, we call this the corrective move. So majorly, most of the time, we want to be trading this impulse move. Is this impulse move that we want to be trading? We don't want to involve ourselves in the corrective move, because this impulse move is the main move. So because this impulse move is the main move, so we want to be trading the impulse move and then just watch out for the correction. But now you can see this is impulse, correction, impulse, correction, impulse. Yeah. The green ones are the impulse, the red ones are the correction. Let me write. So you can see this is the impulse move, this is the correction move, this is the impulse move. And if you notice that the impulse are always longer. So we don't want to involve ourselves in this corrective move. Now, when this MSS happens, you will see that it automatically flips. This guy now becomes the impulse move. This guy becomes the impulse move. I think it was this guy I used. Hopefully so. So this is the impulse move, and then this becomes the corrective move in a downtrend. Yeah, once we get that MSS, you will notice that this becomes an impulse move and this becomes a corrective move. Same thing here, when we are in a downtrend, we have, let me call this so that I don't have to start drawing again. Now, this guy right here is the impulse move. Clone this. So this guy right here is the impulse move. Then the pullbacks, which is this one, we call it corrective or pullbacks. I like to use, anyone you use is fine. Corrective move, the pullback, it's all correct. Don't need to, we are not see. I don't know. Me, I'm here to make money. It's those that are not here to make money that are looking for names. Anything you call it, just make me understand how it works. That's all I care about. Yeah. So this is a corrective move, and this move is always short. Yeah, that's why I say we shouldn't get ourselves involved in the corrective move. Our major goal should be to ride this impulse and be out before this correction starts. Do you get? Let me show you on the chart. I think we should use 4 hours. My network is dealing with me. I need to finish this fast because if this deletes again, I'm sorry guys. I've done my best. Alright, so you knew we drew this in an uptrend. Now, this here, this big move here is the impulse move. This is the impulse move, this green guy, because it's the main move. And you see, as I said, the corrective move is short-lived. It's very short. Just imagine from here to here. So we don't want to waste our money looking for this corrective move. We rather wait and ride the impulse. This, let me delete this guy and just clone this guy. Let me just use the next one. I think that next one is big. So this is another impulse move. This is, there's no space there. That's why I left. That's also an impulse move. And this was a corrective move. But let's use this guy. So this was another impulse move. Can even drag it to this guy. And then you can see the corrective move again. Very small. Like small. This corrective move is small. The reason I told you that we don't want to get involved in this. When it also comes to a downtrend, we can see that. Let me clean this guy. So you can see that when it comes to the downtrend, this was the impulse move. This was our MSS, of course. This was our MSS or a change of character, yeah. These are MSS or a change of. Oh, okay. Sorry, the line is still. All right. So this was our MSS right here. MSS right here, and this was the impulse move. And then you can see how the corrective move, that correction. Do you see how little it is? Is that when you want to go and waste your money? Don't waste your money on it. Just wait and be patient enough to catch the next impulse move. This is it. The next impulse move. You can see that the impulse moves are always longer, and that's what you should be catching. Don't catch the corrective move. Avoid the red one. Red is danger. Avoid it. Just make sure that you wait for the corrective move. You wait for the impulse move. Once the correction is done and you get the message, enter for the impulse move. Do you understand? So in the next video, we'll go deeper into market structure, because here I did not talk. I know I did a TikTok video about external and internal structures. Now in the next video, we will go over that and I will break it down. But for now, just know this basics so that it's not when I make the next video you will be more confused. Alright, so in all, don't forget everything. Watch this video. If you have to watch it 10 times to understand, watch it. And the best part is, watch it while practicing it on the chart. This is what differentiates profitable traders from unprofitable traders. Unprofitable traders are lazy to study. Yeah, they are very lazy to see their ass down. They only want to be pressing buy and sell. Don't be that person. If after this bootcamp you don't make money, even see, I had to do this video like this is the second time I'm doing it after it's deleted. And like, if you don't become profitable after watching everything I'm teaching you, even my head will swear for you. So sit your ass down, watch this video, understand it. I can assure you, if you put your head down and watch everything I'm teaching you here, you will not be looking for money in this market. Money will be looking for you in this market. Yeah. So yeah, your assignment on this one is to identify the trend of any pair. Mustn't be only gold. Yeah. I think people should use Euro USD. Euro USD has a very good market structure. I love to study market structure using Euro USD. I think I learned that from Lex. Yeah, I learned it from Lex. Use Euro USD to study market structure. So show me the structure on Euro USD. Show me an uptrend, show me a downtrend, show me a consolidating market. Then show me an impulsive move and a corrective move. Then show me a valid break of structure and a valid market structure shift. That is what I hope. Watch it again. Listen. Show me an uptrend. Show me a downtrend. Show me valid break of structure. Show me an impulsive move and a corrective move. That is what I want you to show me. So yeah, I'll see you in the next video. For now, adios.